Good morning, all. Welcome to this session. Now, this is a session where we are going to be looking into one of the examples of the simplified Wyckoff methodology and entry system playing out within the British pound to the US dollar pair this morning on the 5th of March. Now, this trade is far from TP, but it is the entry that we are coming to this video to show you. Now, ultimately, you guys probably already know how to use this system, but sometimes it can be a little bit hard to spot in terms of structural narrative. Now, of course, if you are watching this video, I expect that you probably already understand the swing methodology and the way that we use our swing high and our swing low to define a clear directional bias within the market. In this case, you can clearly see that our directional bias is up. So what we are looking at within here is a very clear principle being met. Now, of course, this entry system is a simplified version of the overall deeply complex Wyckoff system. Now, if you want to go and look at the full Wyckoff system and the understanding of that, then please do that. But be prepared, because it is quite a lengthy learning process. This is why we have taken that system, drawn the key elements out of it, and then we apply it using the basis that we already have in place. Now, essentially, liquidity is always being moved within the market, and we always look for the liquidity to be displayed for price so it can then be used to create the new movements. So we always have to remember these key elements. The key elements are our swing ranges are going to dictate to us where we expect price to travel to, in this case, up. We always have to see a sub 50% pullback. This ultimately is going to give us a clear discount and premium range. Now, if we're buying, we want to be buying at a discounted price. If we're selling, we want to be selling at a premium price. Very simple supply and demand, understanding the basis of a range. So if we're looking at this right here, you can see that we have come way below the 50%, and we've actually tapped into our order block, which is the lowest unmitigated order block within our range. And we are looking for this pair to go bullish now. So as you can see, we already have an entry that's been given. So let's just take a look at what this entry is and how it has played out. Now, this entry as a whole is going to be spotted everywhere if you apply the right rule set. Now, we are just going to pause this quickly because I don't want this to take off without me covering the point as to what we have marked within here, as this will again deepen your understanding of what we're looking at. So right here, we want to see what the structures within price action are doing. Now, if something like this, where we have quite a lot of small candles, nothing huge in terms of expansive moves, but you can see there are clear lows and highs within here. You can go to the 15-minute time frame, for example, and use this as your overall template to define your structures a bit easier. Now, we're looking for our free drive system, which ultimately is going to be a simplified version of the initial shift within market structure when it comes to the Wyckoff. We're then looking to locate our spring and our test, and this is the point where we get involved in the market. So right here, if we look at what we have a clear high which puts in a new low. Now remember, we're not looking for structural closes below lows, we're looking for just lower prices to be delivered. In turn, looking for the next high, finding where this runs down to the next low, and doing the same thing again if we have another high into a new low. This is a free drive pattern. Now, they're all going to have slightly different characteristics. They're all going to be slightly different looking, but ultimately they're always the same thing. Looking for 3 valid highs that have put in 3 valid lows. Each high representing either a lower high or a higher high, depending on what direction you're traveling in. Now, right here, you can see we have 1, 2, 3, 4, 5, 6. Now, of course, we have 0, 1, 2, 3, 4, 5. But ultimately, we will count to 6, as that gives us 3 of both structural narrative. we're looking for each of these highs to have the same characteristics, and these characteristics are imbalance and impulsiveness. And we can see coming from each of these highs down to the lows, there are areas where we have impulsiveness within here. Again, areas of impulsiveness, and then finally a very small area of impulsiveness here. Now what we're looking for is the high that creates the last low to be taken. Now if we have a structural principle where we create this and price does not take the high and it only goes lower, this whole structure and the whole simplified Wyckoff schematic will move down with that structure, assuring that the price action that you are tracking has the same characteristics. If we're not seeing that impulsive characteristics, it becomes a lot less likely that Institute is driving this price action, and overall it could be a profit-taking move rather than a retail trap move, if you were. So from the point where this high is taken, you can see we displace down to the low, we take this high. This opens up what we will call a buy-side window, or you can call it a BSW. It's completely up to you what you decide to call it, but ultimately this is used, and you already know this, to find an entry, and it's classed as a window of opportunity for you to be able to find a trade within. Now all we're looking for within this window is a microscopic or fractal version of the same entry scenario. So let's go down to the 1 minute time frame here, and you're going to see exactly what we're looking at here. And you can see within this window that we have a clear drive down from a high into a low, back to a high, into a low, back to a high, and then into a new low. One point that we will cover before we go on to the next part is if you are finding your window within the 5 minute time frame, only a 5 minute close below this window is going to invalidate it. 1 minute closes below this point will not invalidate it unless it is a 1 minute window. If it's a 1 minute window and you have a 1 minute candle close outside of it, it will invalidate that window. But in this case, we have a 5 minute window with nothing more than a sweep on the 1 minute, no 5 minute candle closes. So we identify this point, and we're going to set our orders at the 4 in this case, but it would technically be 5 if you were counting 1, 2, 3, 4, 5, 6. And then we're looking for an impulsive shift higher. Now, if we're already within a window, which we are, and then we establish a new free drive move inside of this window while staying within the parameter low and parameter high, we can then trade at the point of this being taken. Now, of course, you can look for price pulling back in and trade from the low area, but the impulsive nature of these scenarios means that it's not that often you're going to see a clear pullback into a preferred point to trade from. So as long as the window is not too large, simply place your stop loss at your low and your entry at your 4, and then expect price to expand through, following back into your narrative of your swing range in this case. Now, of course, this can be used in the same principle as a 5 minute range. It can be used within 1 minute structures. It can be used in any sort of plethora of systems that you have established a directional bias within the market already. Just the preferable scenario is obviously playing off the low end of a swing range, gives you much more probability in terms of expansive potential for the trade. So again, there is nothing super complex about this. We just have to make sure that we're following the structural narrative, and ultimately all of our rules are met. When you see the rules met, there is a much higher chance that you are going to see an expansive movement through these highs overall. So when we're looking at the price action, if we see these points met, then we could at least follow through into these higher movements. So just before we started explaining the lower point here, I did rewind the price action, but it is in fact undone that rewind. Now, if you go back and rewind the video to the point where we did pause it, you would see that we have these highs within here. So we have the high marked up here. Now, why do we have this high marked? Okay, so this is a very simple system here. And all we're looking at within this principle is at the point of displacement, so at the point of price pushing higher, we created a rather large 5-minute range. Now, of course, you'd have to confirm this 5-minute range by following your narrative, but the main principle here is that we've run out of the pre-existing structural move, and we've put in a 5-minute low and a 5-minute high. This has a bullish narrative behind it. So if we're looking at these movements here on the 1-minute time frame, you can begin to see that we have a low that was produced here to this high. Price comes down and it breaks at this point. So we're tracking from the last major high to the last major low, which gives us a bearish movement within this bullish range. So if we understand that the bias of our overall range is bullish, but the internal 1-minute range is bearish, if we have a price action move which is pretty much meeting the simplified Wyckoff scenario, we can mark the last high within that, and if this high becomes compromised, so price takes it, there is a high chance that we could see an impulsive move through the highs. Now, we'd prefer to see this in the lower 50%, so the discount area of our buy bias range. But in this case, it's being shown to us in the upper area. So if we go back now where to price actually has played through here, you can see the impulsive move came through, and then you'll see a big impulsive shift. Again, this is telling us that there is liquidity sitting above these highs, which is ideal because this is what we're looking for. And then we've played back to where we are. You can see we're pulling back a little bit now. So ultimately, we'd be looking for price to play off of this point. Now, this is, of course, 1-minute structure, and it doesn't have a huge impact on the actual entry scenario that was given here. But we can look to apply the same rule set and then trade within the 1 minute if that's something that you'd be interested in doing. Again, it's going to come down to how you want to use this system. The simplified Wyckoff system is essentially a free drive with a shift and then a test within that, confirming the test with the same schematic. Again, remember the market itself is fractal. So the fact that it's fractal means that we can use the same system, same rule set across every basis, especially if we're applying swing low to swing high, pull back below the 50%, looking for that displacement of orders, finding an area where we know that the bias is the same, so within a 5-minute range, then we can expect that continuation to come through. Remember, when we're looking at a swing range, we have a swing low, we have a swing high. This is our bias. Always remember this principle. If we have a swing high and we have a swing low, this is nothing more than on a higher time frame, the same markup that you see in every principle. A high to a low, back down to a high, back up to a high, and down to a low, then to a high. Swing high, swing low, swing high, swing low, swing low, swing high. And the same principle. Expect it to pull back and continue. So what is this? Swing low, swing high, we pull back. What do we expect now for this? New high to be formed. Simply following high time frame trend, but using 5-minute order flow to define that. So always keep on the simple side of the market. Now, the market itself is a complex thing, and the algorithm that runs it will run consistently. So it's not about being 100% accurate and pinpoint accurate in the market, but it's about being on the right side of the overall structural narrative. Now, you can, of course, just define a high and low range within an hourly time frame, but it's always going to be better if you can have a consistent rule set that's going to lead you into the same principles. So I hope this has helped you guys understand the free drive system. Now, of course, if you are watching this video, like I've said, you already know the main principles, but if you do have any questions, drop me an @ in one of our chats and I'll obviously address it accordingly. What's going on, guys? So it is the next day, and we're just coming back to show you the exact setup that we covered yesterday and how it actually played out in the end. Now, we mentioned yesterday we were quite far off of our actual TP, between reaching our target and showing you the initial entry, there was actually another entry given, and we actually walked the members through with this entry. Now, due to our risk management, we actually got tapped out of this one with a very minor profit. Now, again, that just goes down to overall management systems. Every trade is going to react differently. Some trades are going to run back and tap you out. Some trades are going to run the distance. In this case, unfortunately, it tapped us out before it got to target. But again, this is the principle of the entry model we're showing you, not the end result that we are focusing on. Every end result is different. Ultimately, we had 2 trades. One of them ran really nicely and the other one only tapped us out at a partial. So again, this is just a follow-up from what we were showing you yesterday. Very simple swing range high, swing range low, point of interest, window creation at that point of interest, entry given within that window, and the same window again was used for a secondary entry confirmation with the clear 1, 2, 3, 4, 5, 6 points, and then ultimately price running up through the highs. So guys, if you want to learn this system, it is super simple. If you want to be part of the community where we've got members actively using this system all of the time, then click that link down below and hopefully we'll catch you in our next live stream. Peace and love guys, have an amazing rest of your week.